Introduction to Financial Documents. Hello everyone. I'm so happy to see you in this video. In this video, we will discuss the documents used in international trade transactions. In an international trade transaction, documents are extremely important to all because documents are evidence that all parties have fulfilled their obligations. Buyers also depend on the documents to decide payment or not. In international trade, the number of documents required and the nature of the documentation will vary greatly depending on the underlying contract. For example, sales contract, the nature of the goods, the value of the cargo, the complexity of the export sale, the shipment transport required, and the rules, restrictions and trade agreements of the countries concerned. The key documents in international trade for goods are a contract of sale, bill of lading, or other transport document, commercial invoices, payment-related documents, a documentary credit, bill of exchange, bank guarantee, bank draft, promissory note, etc., insurance documents, etc. The parties are required to enter into several subsidiary agreements with, for example, transporting companies, insurance companies, and banks, depending on the respective contract of sale. International trade requires the parties to carefully manage several documents, and the parties should be familiar with the correct usage and potential pitfalls concerning the documents. In international trade, the number of documents required will vary depending on the individual transaction. Documents come in two types: financial documents and commercial documents. According to Article 2 of the IRC 522, the Uniform Rules for Collections, 1995 revision, ICC publication number 522, documents come in two types: financial documents and commercial documents. Financial documents means bills of exchange, promissory notes, checks, or other similar instruments used for obtaining the payment of money. Commercial documents means invoices, transport documents, documents of title or other similar documents, or any other documents whatsoever, not financial documents. Financial documents mean bills of exchange, promissory notes, checks, or other similar instruments used for obtaining the payment of money, while commercial documents mean invoices, transport documents, documents of title, or other similar documents. In this video, we will focus on one of the most common financial documents, bill of exchange. What is bill of exchange? A bill of exchange, or a documentary draft or draft, is a convenient method of collecting debts internationally with a special status recognized in many jurisdictions. There are many ways to define a bill of exchange. According to the Bills of Exchange Act 1882 of England, bill of exchange is defined as an unconditional order in writing, addressed by one person to another, signed by the person giving it, requiring the person to whom it is addressed to pay on demand, or at a fixed or determinable future time, a sum certain in money to or to the order of a specified person, or to bearer. Or you can explain in short that a bill of exchange is an unconditional order in writing to pay a certain money. The bill of exchange is explained as an unconditional order in writing. Unconditional means on the bill of exchanger, you cannot add any conditions to make payment. For example, if the bill of exchange is added in the sentence, this bill of exchange will be paid if the goods is delivered before May 20th, this bill becomes invalid. Therefore, using a bill of exchange means the payment has to be made unconditional. Although the bill of exchange is drawn from an underlying sales contract, once it is drawn, it is independent of the underlying contract. Now we will deal with the participant to the bill of exchange. There are three main participants in the bill of exchange: drawer, drawee, and beneficiary, or payee. Let's find out what the features of these parties are. Drawer is the party that makes the bill of exchange. In other words, the bill of exchange is signed by the drawer. The question is, who has the right to draw a bill of exchange? The drawer is just the seller. After finishing the obligation of shipment of goods, sellers have the right to request payment. However, sellers cannot draw a bill of exchange before they have completed shipment of goods. The second party in a bill of exchange is the drawee. Drawee is the party who must make payment. Drawee is the debtor who has to pay a certain money on the bill of exchange. Who is drawee? In many cases, the drawee is the buyer. However, to identify exactly who is drawee, we have to base it on the payment method chosen in the underlying sales contract. If the payment term in a sales contract is documentary credit, then the drawee of the bill of exchange must be a bank. The last main participant into bill of exchange is the beneficiary or payee. The beneficiary is the party to whom this bill of exchange has to be made. The beneficiary could be the drawer itself or the third party. To summarize, in an international trade transaction, the drawer in a bill of exchange is normally the seller who has the right to collect a certain amount of money. The drawee is normally the buyer or the issuing bank in case the payment term is documentary credit, and the beneficiary is the drawer itself or the third party. There are many types of bills of exchange. Based on the time of payment of the bill of exchange can be classified as sight bill and term bill. When the bill of exchange is drawn to pay on demand or at sight, it means pay immediately or pay at sight of the bill of exchange. It is called a sight bill of exchange or sight bill. In this case, the drawee has to pay immediately when the bill is presented. The second type is the bill of exchange pay on a specified date in the future. In this case, the bill of exchange states to pay at a fixed or determinable future time, or you could say pay at the future date. This type of bill is called a time bill or term bill. A very common transaction relating to a bill of exchange is the acceptance. The acceptance of a bill of exchange is a guarantee of payment extended by the drawee towards the order of the drawer. When accepting a bill of exchange, the drawee becomes an acceptor who is primarily liable to pay. The drawee often finalizes his acceptance by signing under the words accepted or acceptance on the face of the bill. Notice that a sight bill is payable on the presentation of a bill to the drawee and, therefore, acceptance of a sight bill is unnecessary. The following feature of the bill of exchange is the number of copies of the bill of exchange. Bills of exchange are normally issued in sets. Each part of the set is numbered and containing a reference to the other parts. The whole of the parts constitutes one bill, and only one part is to be paid. Once it has to be paid, the other parts have no longer to be a bill to ask for the payment. Therefore, you usually see on the face of the bill of exchange, the drawer often states the sentence, paid to the first bill of exchange, the second with the same tenor and dated being unpaid. One of the most important features of the bill of exchange is that it is a negotiable instrument. In principle, a bill of exchange is a negotiable instrument unless specifically stated not to be. It means the beneficiary of the bill can transfer its favor of a bill of exchange to another. If the beneficiary of the bill puts his signature on the back of the bill to transfer the right to receive money from the acceptor, then he becomes the endorser, and the person to whom the bill of exchange is transferred will become the endorsee, the new beneficiary. This procedure by which a bill is transferred from one person to another person for the settlement of debts is called endorsement. The next part is about the key elements in a bill of exchange. A bill of exchange has the following elements. The title and number. A bill of exchange should have the title and the number. Date and place of issue. The issuing date of the bill of exchange cannot be earlier than the shipment of the trade transaction. Regarding the place of issue of the bill of exchange, this place normally is the seller's country. The payment amount. This is the certain amount of money stated on the bill of exchange. Payment term. It could be outside or a specified date in the future. The information of drawer, drawee, and beneficiary. Especially, the bill must state the full name and address of the drawee and drawer, and the bill of exchange must have the signature of the drawer. Based on the key elements of a bill of exchange, now you can draw a bill of exchange. However, to draw a bill of exchange correctly, you need to pay attention to some of the following points. The bill of exchange is independent from the sales contract, while the sales contract is the underlying contract to draw the bill. Therefore, the drawer must understand the terms and conditions of the underlying sales contract. To draw a bill of exchange correctly, the drawer also identifies the drawee and beneficiary. The information of drawee is identified based on the payment term in the underlying sales contract. Specifying the payment details of the bill of exchange, such as the amount payment, the currency code, and the payment term is extremely important when drawing a bill of exchange. These elements may determine the ability of the bill of exchange to claim money, and the drawer should remember to add the required elements to complete the bill of exchange. For example, the signature, the address, the number, or the reference of the bill. The bill of exchange payment process can be summarized as follows. Step 1. The buyer and seller conclude the international sales contract. Step 2. The seller delivers the goods under the terms and conditions of the sales contract. Step 3. The seller draws the bill of exchange and prepares other shipping documents such as bill of lading, insurance documents, packing list, etc. Step 4. The seller presents a set of documents including bill of exchange and commercial documents. Step 5. The buyer makes the payment. Thus, it can be seen that bills of exchange are very important in foreign trade transactions. Bill of exchange is regulated by many jurisdictions, therefore it protects the rights of the parties involved. Bill of exchange is also a convenient payment instrument used commonly in international trade transactions, therefore, it can facilitate the confidence between trading parties. Hence, we have just discussed the fundamental knowledge of the bill of exchange. Based on what we have learned, you can try to draw a bill of exchange based on an underlying international sales contract. Thank you for watching the video and see you in the next lessons.